overall portfolio, you may want to seek the advice of a financial advisor. Adam Lampe is with us, CEO, co-founder, Mint Wealth Management. Adam, a financial advisor. Why could a financial advisor help investors plan and achieve, that's a big one, the long-term goals?
Well, I think it's really critical that you start with a conversation, and no advice should be given by any financial advisor until that advisor truly understands your situation. I truly believe the number one benefit in having a financial advisor is the education aspect. A good advisor can bring a lot to the table. A study done by Russell Investments shows a good advisor can save you over 4%. Believe me when I say I'm always amazed by the things that folks do. For instance, I've had a gentleman, at one point he was taking care of his mother and he took out $1 million out of his mother's account. Well, he didn't realize it was an IRA and he put it in the bank account. The problem was it created a $370,000 tax liability and we couldn't fix that for him. So there's all kinds of things. And I think it's really critical that we personalize all the advice that's given. I had another gentleman that he reached out and he wanted to spend a ton of money devoted towards life insurance and his kids. And then when we did his financial plan, he realized how much he had to sacrifice. So I tell folks all the time, embrace technology. It's really critical.
Yeah, and life insurance is a great thing, but those types of things really add up. So you need to figure out how much are you taking out to pay for that kind of stuff. Tell me about, you have 4 benefits for using an advisor, and I'd love to dive deep into each one. So how can an advisor deliver individual advice, right? You have a little bit for each one, so I want to make sure I don't miss anything.
Yeah, I mean, one of the big ways to maximize earnings is to make sure that you're tax efficient, especially on an after-tax basis. One of the oldest mutual funds out there, I won't get into the names, but its stated fee is 0.6. But last year, if you were a high income earner and you made over $200,000, you actually lost 2.7% because the fund is incredibly inefficient. So one of the things that I encourage a lot of investors to consider is to consider being tax efficient. And there's ways that you can implement that, whether that be through ETFs or stocks, but not all mutual funds are created equal. And just because the stated fee is so low, I know in your earlier segment, I watched it, I was very curious by that. But one of the things that they missed was talking about tax efficiency, because you can have a stated fee of 0.6, but yet you're losing almost 3% in inefficiencies in the fund. So I think that's a value that an advisor can bring.
Yeah, that's a good add-on. That's a good add-on. I'm sure he's well aware of that, but he was trying to keep it basic pertaining to the fees. Tell me more about data and information. And there's a lot out there, but how an advisor can really help you to figure out the most important data points so that you can maximize your earnings.
Well, one of the big things that you always want to consider is GDP. And GDP is a big driver. And I would argue that, if consumer spending is excellent, that means the economy is going to be good. That drives about 70% of the economy. Many analysts if you went back 12, 14 months, said this was going to be a short recession. And it came down to the consumer. The consumer was healthy. 13 months ago, the average person was saving 32% of all their income. Now people are spending. Manufacturing's up. Housing is up. That's been remarkably strong. And there's 20 indicators that we really look at. And this is actually all the indicators are the strongest in about 40 years. I think discipline wins. You have to buy stocks with amazing balance sheets and everything will work out.
Yeah. And then, of course, as we get older, right, you have to change it up and remove some of the riskier assets. That's an important one, right?
Yes, tax harvesting is very key. You always want to sell your losers and offset them with your winners. People's situations change all the time. I recently had somebody that was laid off. They came to me and they're used to being in the corporate environment. And I informed them, hey, you can set up a solo 401k. You can put up to $63,000 a year in there. And he thought he was limited to only $7,000. So yes, things always change. You always want to look at, I've never met anybody that has said, you know what, Adam, I saved too much for my retirement. In fact, we have to be aware that the fastest age demographically or statistically is age 85 and above. So people are living longer and they need to save 10 to 20% of their income if they're able.
Right. And what's the final thought, the final takeaway? I mean, is there a time, I mean, I have 10 seconds, not to use an advisor? No.
Well, if you're passionate about this stuff and you want to do it all day long, then by all means do it. But at the same time, if you're passionate about your grandkids or other things, I know with COVID, personally, I want to travel more. If you don't want to spend
Right.
all your time
Right.
doing things, I think it's really important creating a long-term process to guide your actions. There's a big difference between.
Adam, thank you.
All right, thank you.
Yeah. Yeah, Adam Lampe, Mint Wealth Management.